Nigeria's capital market is facing significant challenges that have led to poor liquidity and hindered its performance. Macroeconomic pressures and an unfavorable operating environment have taken a toll on market stability. Moreover, the lack of accurate data for strategic decision-making and the existence of multiple taxations and conflicting regulations further complicate matters, hampering growth and eroding investor confidence. In response to these pressing concerns, the Policy Advisory Council set up by President Bola Ahmed Tinubu has outlined an ambitious vision for reform to increase the market capitalization to GDP ratio from the current 14.3% to an impressive 25%. And now to achieve this, several strategic steps, including implementation of the Capital Market Master Plan and setting up of National Commodity Exchange with regional trading centers, have been proposed. So this morning, joining us to explore the transformative potential of these strategies is Oladipo Ajayi, who is the head fixed income and foreign exchange at Chapelhill, Denham, and he'll be talking to us this morning. Thank you so much, Oladipo, for joining us on Business Edge.
Yeah, good morning. Thank you very much for having me.
Now, we've seen issues as regards the Nigerian capital market, talk about macroeconomic pressures, unfavorable operating environments, issues with liquidity and all. Now, looking at where it stands now, what are the factors responsible for these squalor, as it were? What are the reasons whereby we are recording these negative indices as regards the Nigerian capital market?
Yeah, I think some of the reasons were actually highlighted in the master plan paper. One of the key things is lack of liquidity in Nigerian markets, and when you say lack of liquidity, it simply means that actually transacting the market without having any movement, aggressive movement in prices. So it simply means that to some extent, we cannot say our market is that very deep, because when you compare our market with like Joburg market, Nigerian market is not anywhere close to such market. So it simply means that we have a long way to go, and also we have a huge headroom for development. And I guess that's one of the reasons why they actually highlighted, because there's a lot of opportunity in the market. Because when you look at the books of companies, the key thing that actually you use in financing business is purely equities and debts. And when you're talking about these equities and debts, it's as good as talking about capital market in entirety. And it simply means that we have not been capitalizing or maximizing this market to actually further develop our economy. And that is one of the things that this master plan is trying to address, to actually capitalize on the capital market, to actually further use it to actually as a vehicle to develop our economy. And at the same time, they also mentioned the issue of data insufficiency, because when you look at most time you hardly can get data about the happenings in Nigerian capital market. But as we speak, I think it's still better than the way where we used to be. But what I think is that we can always be better, because when you can you imagine that it's even easier for you to get data for foreign market like the US market, the UK market, the Joburg market, but same data, same level of data, you find it very difficult to get in Nigeria capital market. So these are some of the things that this master plan is going to work on, and I think it's actually very, very essential at such a point like this.
In that for the handlers and regulators that deal with facts, with statistics, that deal with figures, do not have adequate data that can help guide proposals, can help guide decisions to be made. Why is that a problem?
Yeah, I think the reason why that's the problem is that data bank. And I think, but like I said, we are better than the way we used to be, because we now have FMDQ. FMDQ has risen up to the challenge, and at the same time, NGS also has woken up from their slumber, and they also are very competitive in the market now. So before now, you cannot get data for you to actually use it for research, for you to research into the market and get details of what is happening in the market and how you can use such data to further improve what you are actually doing or what you're about to do. But as we speak now, you can.
Hello, Oladipo. Okay, I think we just lost connection with Oladipo there, but then we'll try to see how we can bring him back on board to continue to tell us what the challenges are, and thereafter we'll get to talk about the solution. So one other thing we'll need to consider is the issue of the growth of the market, because he mentioned that the handlers, as it were, have not been able to maximize and explore the capital markets well. But now that we see that the PAC is planning to increase the capitalization to about 25%, we also want to understand how possible that will be. But then let's quickly go on a short break and see how we can bring Oladipo back to continue to talk to us. Just stay with us. All right, so we have been talking about the Policy Advisory Council and the proposal of a master plan that is meant to rejig the Nigerian capital market. And we've been talking to our guest, Oladipo Ajayi, who's been talking to us and telling us what the challenges are. And he was talking about the issue with data collection. So I'd like to just quickly wrap up on that and tie it to the issue of the growth of the markets, the capitalization now to 25% that the PAC is proposing and is saying that it would make do with. So how possible is that when you don't have adequate data to guide the precisions and of course to guide your steps in achieving that?
So like I was talking about data, like data gathering data, mentioned earlier on, you need data for everything that you're doing, and because of the current dispensation, it's more like a dispensation of big data, and because that is what it's a real business on its own. Like I mentioned earlier on, I said that we are still far better than where we used to come, where we're coming from, because now, at least to some extent, you can still get a reasonable data about Nigerian market now. But I just feel that we still have a long way to go around it to further develop the market, because when you're looking at the moving market from 14.3% of GDP to 25% of GDP, it's a lofty job, and for you to actually be able to attain that level, there's a lot of things that you need to put in place, and also data is very key in that, because an average person that wants to actually come to your market needs those data to analyze and see whether the market is worthy of their investment. They want to come into your environment. They want to see what is happening in your financial system, and they also need some of this data to be able to actually make quick decisions on whether to actually inflow their funds or to actually stay put in their respective countries. And that's one of the reasons why I felt that data is very essential. And if we need to move this market forward to where we anticipate to actually move based on this master plan, it means that we need to focus on data very well. And I feel that there should be more of like a data bank where anyone can actually assess what is happening in Nigeria capital markets. And like the master plan also stated, one of the ways to actually develop the market is also using raising long-term capital. Most times you look at it that you find it very difficult to raise long-term capital from banks because of the nature of their business. And a lot of people are actually finding it very difficult to actually raise funds, and because of that, they are unable to actually further develop their business or further expand their business. But with the availability of the capital market, it makes it so easy for anyone to actually be able to assess the market. And what you have been able to do with capital markets is that you are removing the intermediary cost, which is the cost of bank. So it simply means that you are able to bring the provider of funds and the user of funds together in the same market. And what that would do is that will reduce the cost. And for me, it's more like a win-win to both parties. It means that people that are raising funds, they are able to raise at a lower rate, and people that are investing funds are able to invest at a higher rate than what they would have gotten from a bank. And also, like the master plan also mentioned, that also talk about other forms of asset class that you can also actually further develop in the market, and also working with most fund managers to actually push out products into the market. And I think some of these things are things that are actually obtainable in the developed market. And I think if we actually told some of this line, we'll actually be able to actually achieve the set target of 25% of GDP.
All right. Earlier on, you talked about the fact that the capital market is all about securities and bonds. So I'd like to ask you, how can the issuing of long-term high-yielding debt securities, probably to invest in projects, key projects or initiatives like probably the agricultural sector or maybe industrial growth, how do you think these can help galvanize the kind of growth or positive trajectory that we are hoping for the market?
You see, one of the problems this business are currently having is because that the fund they can access, they are more like short-term funds. So, and when you are accessing short-term fund to fund long-term obligation, there's huge mismatch in both your asset and liability. And that's why most of the reason why you see that a lofty idea will fail, because of the fact that there was actually mismatch of funds. But now, with the advent of this new master plan, what it simply means is that businesses can actually approach the capital market for a long-term fund. Imagine someone coming to the market to say, okay, they are developing a particular agricultural sector. Maybe you are focusing on the rice farming, and you're coming to say, okay, this is the timeline for such investment, and you're coming to the capital market to raise maybe like a 10-year bond, or you're coming to capital market to raise maybe like a 7-year bond, or even a 20-year bond. And what that would do is that it will also bring investors that has suit your risk profile into the market to actually invest in such investment. And also another thing is, imagine also infrastructure. You are talking about the power sector. We have huge assets sitting with PFAs, and it simply means that if this market is available and the market is actually utilized the way we are doing it now, it gives room for the PFS to push some of these funds into this some of this lofty idea. And what that will do is that it will provide funds for people that have idea to actually implement, and also provide benefit for some of these portfolio managers.
We are seeing now that the capital market seems to be responding positively. The reactions that we're getting seems to be a bit positive, owing to the fact that the Tinubu-led administration is coming up with different policies and programs, and trying to move around, rejigging and plugging the different holes within the system, within the country's financial system. Even as we see that Nigeria's external reserves has actually shared about $438 million. Now, is this a ruse, or is this something that we can tag on to as being positive? Is this something that can be sustained, or maybe it's just a fog?
You see, one thing about it is that this thing is long overdue. The foreign investors are already waiting for someone that will actually come in and takes these decisions. Harmonizing the FX windows actually is a very good idea, because I'm simply, if you notice what happened in the market, just when the news actually filtered into the market reacted aggressively, and we saw huge leap in prices of stocks in the market. And also, if you also remember what happened on the Eurobond space, what that simply means that most of the foreign investors are now seeing Nigeria as an investment destination. And what they are also now feeling is that now they feel that someone that is now on the throne is someone that is pro-market. And one thing is that you cannot develop any economy without the market. And that's one of the reasons why part of their master plan includes the capital market, because capital market is a vehicle that you can use for economic development. And just like what we said now, I'm sure by the time all these things are actually fine-tuned and everything is in place, we'll start seeing influx of foreign inflows into the market. We'll start seeing foreign inflows from FBIs. We'll start seeing foreign inflow from foreign direct investors. That's FDI. And what this will do is that it will provide FX liquidity for government and the bank and central bank to be able to need of companies. There are a lot of companies actually here in this country. They are looking for efforts, maybe to actually bring machinery into the country so that they can further expand their business. But they cannot do it just because they cannot even access efforts as we speak. But now, when these policies are this policy comes to push on, what will happen is that we start seeing the fruits of this policy, which will include an inflow of efforts into the market, and influx of efforts to the market will provide liquidity to actually meet obligations that some of these private companies are actually going through as we speak. So for me, I think it's the right thing that is being done, and I don't want to agree that it's a flash in the pan. I think it's the real thing that we will continue to enjoy in the next 4 years of the current reign.
All right, let's look at the issue of companies and see if it's the right thing to be done. Before now, the NGX had expressed its desire to actually list fintech companies and, of course, introduce some youth-friendly products, as it were, on the local bourse. Do you think that is also a right step in the right direction? Do you think it will help drive the course of positive growth for the capital markets? Do you see any potential in that particular decision?
Yeah, exactly. Because, like I mentioned earlier on, that one of the advantages of this is also it will bring in a lot of products into the market. And if you check the master plan, you see that they also mention about further encouraging most of these fintech companies to actually list on the exchange. And one thing is about it is that people are more comfortable when a company is listed on the exchange, because what that means is that that company is not ensured any secrecy. It means that you need to publish your financial. It means that you have to have a sound corporate governance. It means that people can actually look into your book from anywhere in the world. Unlike as we speak now, that's anyone can actually access the books of most of these fintech companies. But with the advent of this master plan, what it will do is that it will bring most of this guy on board. And when it brings most of this guys on board, it will actually attract funds to some of this business to further develop and further expand. And what that will do, it will provide employment to the people. And the end goal is that it will further provide growth to the economy.
All right. Before I let you go, let's look at the commodities exchange in Nigeria. How would you describe its performance? What would you say the challenges are? And do you think that it has the potential to thrive regardless?
Please, I can't hear you clearly. Can you come again?
Okay, so I asked about the commodities exchange, all right, in Nigeria. So I'd like to know what are those challenges and if it has the potential to thrive despite all these challenges.
Yeah, I think commodity exchange in Nigeria is one of the markets that I feel that is still underdeveloped in Nigerian markets. And I think one of the reasons why it's still very much underdeveloped is because of the fact that people are not even aware. And that I will give kudos to Apex for what they are currently doing in the market, trying to sensitize people and also to get to them aware of such market in Nigeria. For me, I think for you to develop the agriculture sector, you cannot develop it without a commodity market, because most of these farmers, when they found out that there's an off-taker or most of their product, it's easier for them to aggressively go into farming. And what that would do is that this would reduce our current food inflation that we're currently going through in the market in this country. And so I feel that commodity market is like a catalyst that we can use to further develop the agricultural sector in this country. So as we speak, it's not so much popular in the country, but a lot still needs to be done to further develop that market and also educate the people of the benefit that accrues from such markets.
To actually set up a national commodity exchange and, of course, have regional trading centers. Because if we're talking about how to grow the capital markets, you will need these kind of steps to take. But then we'd like to find out from you as an expert if that is a viable option to take.
Yeah, like just what you mentioned that the commodity board exchange has been developed. So what I think one of their duties is to actually be like what I mentioned, like off-taker to some of the products that's being used by some of these farmers. So it simply means that you are not exposed to the volatility of prices in the market. And also it means that most of these farmers are hedged. It means that they also can get funding for their business as when due. So you don't need to wait until when you finally get to sell the products in the market before you can get funding. You have people that can actually that can actually lead the product from you and give you funds that will actually help you further expand your business and also further develop your business. So like I mentioned, the master plan actually to a great extent actually spoke to a great extent on the commodity market and the reason why commodity market is needed to further develop the economy.
Thank you so much, Oladipo. We see that there's a lot of potential for Nigeria's capital market, as it were, but of course, there are needed investments in the critical areas to see how it can bring about some viable and, of course, positive growth. We say thank you so much for joining the discussion, and we hope some other time we'll be able to bring you on board to talk about issues like this, and you would oblige. Thank you.
You're welcome.